Fundamental analysis in Forex. Forex traders and investors rely on two main forms of analysis, fundamental and technical. This video will introduce you to fundamental analysis. In Forex, instead of analyzing companies with balance sheets, we analyze countries and their macroeconomic conditions. Fundamental analysis is about the intrinsic value of the investment. When applied to Forex, this means understanding not only the current economic conditions, but also the expectations related to the country's future macroeconomic trends. Clearly, the fundamental analysis doesn't help the traders with the timing of their trade entries and exits. Instead, it explains the reasons why the markets are moving the way they do. Therefore, it is the fundamentals that give us the bias for our trades, while the technical analysis provides the tools needed to manage the risks and to time the trades. In this video, I will introduce you to the three most important macroeconomic factors impacting currencies. The factor number one, central banks. The primary role of a central bank, like for instance the Fed, is to provide price stability and maximum employment. In this capacity, the central bank can either increase or decrease the interest rates, which will have a major impact on the currency. Higher interest rates attract inflows into the currency and move it higher, while lower interest rates have the opposite effect. A central bank also has the authority over a country's monetary policy. In this role, the central bank can decide to impact the lending conditions by purchasing longer-term government bonds. The central bank does this in order to increase the money supply and to make it cheaper for the businesses to borrow and invest. Bond buying programs, also known as QE, tend to pressure the value of the currency. These programs, however, have to eventually come to an end. When market participants believe that a central bank is likely to soon reduce its asset purchases, they start to buy the currency. Central bank policies are usually in place for several years. This is why actions taken by central banks often move the markets for extended periods of time. Understanding central bank policies and the factors impacting those policies can provide traders with sizable trading opportunities for several months, and sometimes even longer. The factor number two, employment. As central banks exist to provide price stability for their economies, the economic conditions dictate their policy choices. Increased hiring means that the economy is growing, and this will over time create pressure to raise wages. This, in turn, will eventually create inflationary pressures and cause the central bank to tighten the monetary policy either by increasing the interest rates or by reducing the asset purchases. Should the employment conditions deteriorate, the central bank tries to intervene by adding liquidity to the economy via lower interest rates and through a bigger bond buying program. While it is questionable if central banks have had success in inflation management, we know for certain that a central bank changing its policy impacts currencies significantly. The factor number three, gross domestic product or GDP. The gross domestic product is a statistic that records the monetary value of all the goods and services produced in a country. The four inputs to the GDP are personal consumption, business investment, government spending, and net exports of goods and services. GDP growth is only possible if the economy is doing well. This is where the employment trends and subsequent changes in private earnings have a major role, as many economies nowadays rely heavily on private consumption. During times of financial or health crisis, GDP growth tends to contract. Should the growth rate contract for 2 quarters in a row, the economy is classified as being in a recession. Therefore, as with all macroeconomic analysis, one single data point in GDP doesn't make a trend. Thank you for joining us on this video on fundamental analysis. Make sure you subscribe to our YouTube channel to be notified of my next videos, and subscribe to tiomarkets.com/analysis to receive my industry-leading market analysis reports by email.